Hello friends, myself I am Kadar Mohideen, Assistant Professor, BBA Department, AJK College of Arts and Science. So today we are going to see Cost and Management Accounting Unit 1. So the following are the important topics we are going to discuss in Unit 1. So first we are going to see the meaning and definition of Cost and Management Accounting, scope, objectives, functions of Cost and Management Accounting, merits and demerits of Cost and Management Accounting, distinction between cost management and financial accounting, elements of cost, cost concepts and cost classification. So these are the topics we are going to discuss in this class. So first of all, let us go for the meaning of cost and cost accounting. So cost, it means the total of all expenditures incurred on the production of goods and services. So if you want to produce any product and services, so we require a lot of cost will be involved. For example, material cost, labor cost, factory cost. So like that, so many costs will be incurred. So that is called cost. And next we are going to see cost accounting. It is the accounting system set up for recording the cost. It begins with the recording of income and expenditure and ends with the preparation of statements and reports of the cost. So cost accounting is nothing but it is a systematic record of cost in a reporting format. So next let us go for the definition of cost accounting. So cost accounting is a branch of accounting information system which records, measures and reports information about cost in an organization. So if it may be a manufacturing organization, so they want to know about how much cost has incurred in order to produce a product and services in that particular organization. So first they will record all the cost information in the books of accounts, and next they will measure how much worth of cost has incurred. So finally they will prepare the reports and submit to the management for decision making. So this is called cost accounting. So next let us go for what is the meaning of management accounting. So management accounting deals with another aspect of the finance in an organization. The information revealed by the management accounting is primarily used by the internal staff. It means management staff, so which uses the financial accounting decision making. And next, management accounting is more used in the strategic decision making of the organization. It is not only used by the middle level management people and also higher level management people like CEO of the company, managing director of the company. So in order to take the strategic decisions, for example, whether they want to produce the raw material in the organization itself or they want to purchase the raw material from other organization. So like that, so strategic decision making, if they want, they require the accounting information. So that accounting is nothing but that is called management accounting. So next let us go for the scope of cost accounting. So cost accounting will help the management to eliminate the less or unprofitable activities by disclosing them. Second one, it reveals the exact cause of losses or inefficiencies and then helps to improve the efficiency of the organization. So third one, it provides the information upon which estimates, tenders are made. So we will take a lot of tenders from the government. So we have to submit on time. So for that we have to prepare the cost, how much cost will be incurred to complete a particular work. So for that the cost accounting is very helpful one. So next one, it guides the future production policies, whether we want to make or buy the raw material. So next one, it enables the periodical determination of the profit or losses without stock taking. And next, it helps in controlling cost by providing information for comparison of cost and the application of the standard costing and budgetary control. So already we have prepared the budgeter. So comparing with the budgets, whether it has increased comparing with the budgeted figures or less than the budgeted figures, so that easily we can make the control over the cost. So next is seventh one. It provides an efficient check on stores, labor and machine, whether raw materials are sufficiently available on the stores and labors are available and machineries are available in order to go for the without interruption of the production. And the last one, it guides the management in fixing the prices properly and to take the decisions making regarding various matters like the profitability, purchase or production of a component, acceptance of an order below cost, proposed capital expenditure, use of different machine and methods of manufacture. Like that, in all these aspects they have to take the decision. So for that, the cost accounting is very helpful one. So let us go for the next topic, that is objectives of cost accounting. The important objectives of cost accounting are: first one, to ascertain the cost of any product and services produced in an organization. Second one, to control over the cost in order to setting the standard cost and budgeted figures. And third one, to provide the basic for the formulation of the policies of the organization. The organization, they may go for the production policies, selling policies, like that. So in order to formulate the policies, so this cost accounting is very helpful one. So because of these three important objectives, we have to prepare the cost accounting. So let us go for the next topic, that is functions of cost accounting. So first one, classification and subdivision of the cost. The costs are collected and classified into various elements which help the management to ascertain the profitability of each and every activity, and also in order to control the cost. So second one, control of material, labor and overhead cost. So in an organization, if you take the cost, there are so many elements of cost, that is material cost is there, labor cost is there, and overhead cost, that is indirect cost also will involve. So we have to control all these costs, then only we can control the overall cost of the organization. And the next third one, business policies. So it guides the management in taking the decisions regarding various matters connected with the production and sale of the goods and services. So what kind of product and services we want to manufacture, how many quantities we want to manufacture, at what quality we have to manufacture, to whom we have to sell our product and services, at what price we have to sell the product and services. All those business decisions or the policies we can take only through based on the cost accounting. And next one, budgeting. So it is a coordinate plans of action. So it helps to correct inefficiencies before enter into the business. So if you prepare the budgets well, so easily we can make the control over the cost in an organization. And the next one, standard costing. So the organization, they have to fix the basis for every cost in an organization. It may be the labor cost, or it may be the material cost, or it may be the overhead cost. So they will fix the standard cost. So it will act as the measurement of efficiency and future planning. And the next one, price determination. So we have to fix the price of our product and services. So if you want to fix the price of the product, so definitely it is based on the cost. For example, we are purchasing a pen for 5 rupees. It is the price for the particular pen, but the cost it may be 3 rupees. So based on the cost only the price will be fixed. And the next seventh one, the maximum use of resources. So it provides the reliable data to get maximum output at minimum input or minimum cost. And next one, expansion programs. If the company wants to go for additional plants, establishing in different districts or different states, okay, if they want to go for the expansion policies, so for that the cost accounting is very important one. Next one, instrument of control. The costing is an instrument used for planning and controlling of the activities in an undertaking to achieve the desired results. And finally, it also informs the management about the optimum profitability, seasonal variations, idle time, capacity. So all those information also easily we can get it through cost accounting. So these are the various advantages or various functions of the cost accounting. So next, let us go for the merits of cost accounting. Next topic, and first one, information. So cost accounting provides information to the management for planning, execution and controlling of the activities in an organization. It may be related to the production, it may be related to the marketing, it may be related to the finance in an organization. All those activities easily we can control only through the cost information. So that information is provided by the cost accounting. Second one, classification. So we can classify the expenditures or the cost in an organization in a different elements. Okay, for that cost accounting is very helpful one. And third one, controlling. So it provides a detailed system of control over the cost in an organization. And fourth one, support to top management. So without the support of the top management, so definitely we cannot implement any new system in an organization. So if you are getting very good support from the top management, we can implement that costing technique or the costing system in an organization very successfully manner. And the next fifth one, resistance from the existing staff. So already they are following the old technology or the old methods of estimation of the cost. So if you are introducing any new softwares related to controlling of the cost in an organization, first you have to get the acceptance from the existing staff. So initially they will refuse to change. So but if you are giving proper training to the staff, definitely they will accept the change. And the next one, cost of operation. The costing of operating this system is heavy unless it is designed according to the specific needs of the concern. So we have to concern about the cost of operation. It should be minimum one. And the next one, installation. After the installation of the costing system, there must be proper supervision and implementation. So somebody should be appointed to supervise whether the new costing technique or the system is effectively implemented in a particular organization or not. So we have to supervise that. So then only it would be successfully implemented in an organization. So these are the various merits of cost accounting we have seen. So let us go for the demerits of cost accounting. So first one, it is an unnecessary one. So without the help of costing, industries prepared reports in the past. So it is argued that the introduction of the costing is unnecessary and wastage of the time. So second one, they are arguing that so it is inapplicability. So there is no separate system of costing applicable to all types of industries. So how we can implement the same system of costing technique to all the industries is another important questions they are raising, and hence it cannot be suitable or the requirements of many industries and inapplicable to all such industries. And the next one is third one, defective one. So it has been proved as a defective system in many cases since it fails to produce the desired results. So whatever the results we have expected, it is not given, so that they are telling this cost technique or the cost accounting is a defective one. And the next important demerits is expensive one. So if you want to purchase the new accounting software, especially for the cost accounting, so it would be too much expensive. So it is quite an expensive system. Therefore, the big industries or the organization can adopt, but the middle level industries or lower level industries cannot accommodate. So like that. So this demerit they are telling. So these are the various demerits we have seen. So first one, it is an unnecessary. Second one, they are telling it is inapplicability. So third one, they are telling it is a defective system. And fourth one, they are telling it is an expensive one. So these are the various demerits of cost accounting is there. So let us go for the differences between the accounting cost accounting and management accounting. So first let us go for the differences between financial accounting and managerial accounting. So first point, so reports to the outside of the organization, so owners, money lenders, tax authorities and regulators. So financial accounting is giving the report to the outside persons, especially for the owner of the organization, money lenders, tax authorities and regulators. But for the managerial accounting, they are giving report to the inside persons in an organization. For example, financial manager in an organization, production manager in an organization, managing director in an organization or the CEO of the organization. So why they require the information? Because for the planning, directing and motivating, controlling and performance evaluation in an organization. So second point, the difference between the financial accounting and management accounting is, so financial accounting emphasis is on summaries of financial consequences of past activities. So whatever the financial activities happened in previous month or previous year, so will be taken here. Only the past activities will be taken. But for the management accounting, the emphasis on decision making affect for the future. So they are taking all these data in order to take the decisions in the future one. And the next third point, the objectivity and verifiability of the data is emphasized in financial accounting, but the relevance of items related to decision making is emphasized in managerial accounting. And the fourth point, precision of information is required in financial accounting. The timeliness of information is required managerial accounting. So it may be prepared daily basis or weekly basis or monthly basis or quarterly basis or annual basis. So there is no any time limit for the preparation of management accounting. And the fifth point, for the financial accounting, only summarized data for the entire organization is prepared. So here the entire organization data will be collected and presented as a report, as a balance sheet or trial balance or trading profit and loss account. So they will prepare for the entire organization in financial accounting. But for the managerial accounting, we can prepare the report based on the different segment in an organization. It may be based on the departments. So production department separately we can prepare, HR department, marketing department. So we can prepare a separate report, and based on the product, an organization may produce 2 or more products. So each product they may prepare a report, and based on the customers they can prepare the report, based on the employees they may prepare the report. It is possible in managerial accounting. And the sixth point, the financial accounting must follow the generally accepted accounting principle. So based on that only they can prepare the reports. But for managerial accounting, they no need to follow the generally accepted accounting principle. So whatever the data they require, at what format they require, so they can prepare according to that. They no need to follow the generally accepted accounting principles. And for the financial accounting, it is mandatory. So as per the Income Tax Act, so they should compulsorily prepare the financial accounting reports. Okay, but for the managerial accounting, there is no any mandatory. It is based on the requirements of the management people. They will prepare the management accounting. So these are the various differences between management accounting and cost accounting. So dear students, let us go for the next topic. So that is the different methods of costing techniques. So the following are the different methods of costing techniques. So first one, job costing. So this system is adopted in industries where each job has a separate identity and are produced against the specific orders. So very big industries, they are following this costing techniques. So they are producing the products and services, and they are getting the specific orders based on the job. So the costs are collected for each job separately under the system. For example, BHL industry, it is a central government industry. So they are producing the boilers. So they may get the orders from the power generation companies. That orders may be 500 crores or 1000 crores. So that is called job costing. And next, let us go for the batch costing. So this method is adopted in industries where the goods are produced for stock and for sale to the consumers in general. So in this system, the cost are computed for a batch or a lot of instead of a job. Okay, so instead of the job, we will prepare the cost accounting based on the batch. So it is suitable for the industries producing the components, sub-components and spare parts for assembling the finished goods. So for example, for a car manufacturing company, there are so many sub-components are required. They are purchasing the sub-components from various industries. So those industries, they are producing the various components or sub-components based on the batch costing system. And the next, methods of costing. Next one, process costing. So this is the third important costing technique. The system adopted to ascertain the cost of each process of production is known as process costing. So in this method, the production cost will be divided into different processes. So different processes will be required in order to get the final products. Okay, it is suitable for the industries where a product passes through the different stages or the different process for the completion. Okay, for example, cotton textile we can take, or paper industry, or sugar industry, or chemical industries, or oil extraction or the production industries we can take. So they are going for the different stages of production. Okay, each stages of production is called each processes. Each processes, how much cost will be incurred. So if you calculate, that is called process costing. And the next important method is unit or output or single costing technique. So this method is suitable for the industries where manufacturing is continuous and the units are identical. So easily we can identify the units of production. So it is applied in industries like mines, quarries, oil drilling and breweries and brickworks and cement manufacturing organization. So the unit cost is determined by the dividing the total cost by number of units produced. So for example, 1 lakh is total cost. So per unit, we have produced 10,000 units. So 1 lakh divided by 10,000. So easily we can come to know. So each unit cost is 10 rupees. So like that we can calculate the unit cost. So next important method of costing is operating costing. So this system is employed in undertakings performing services rather than producing the goods and services like transport industries and power and supply companies and hospital industry or hotel industry. We can apply the operating costing technique. So this method is used to ascertain the cost of performing the services. So next important method is multiple costing or composite costing. So if you apply more than 2 costing techniques in the same industry for the same product and services, so that is called multiple costing or composite costing technique. So this is suitable for the industries where a number of components, parts are separately produced and subsequently assembled into a finished product or the final product. For example, industries, those who are manufacturing the cycles, industries, those who are manufacturing the automobiles, for example, 2-wheelers, 4-wheelers, okay, trucks, buses, or the cars and radios and typewriters. So those industries, they will follow this technique of costing, that is called multiple costing or composite costing technique. So these are the various costing techniques are followed in an organization. So let us go for the next topic. So that is called types of costing. So what are the various types of costing is available? Let us see. First one, uniform costing. So when the same costing principle and practices are used by several concerns for the common control or the comparison of the cost, it is known as uniform costing. So all those companies producing the similar product and services, they will follow the same costing technique. So that is called uniform costing. So next one, marginal costing. It means the ascertainment of marginal cost by differentiating between fixed and variable cost and of the effect on profit due to change in volume or the type of output. For example, if you produce one more additional unit, how much cost will be incurred? So that is called marginal costing. And the next important costing is standard costing. So it is the preparation of the standard cost and applying them to measure the deviation from the standards. It analyzes the causes of variations with a view to maintain maximum efficiency in the production. And the next important costing is direct costing. The practice of charging all direct cost to the products is known as direct costing. Under this system, the indirect costs are written off or deducted from the profit of the particular period. And the next one is historical costing. So under this costing, the costs are not predetermined but ascertained after their occurrence. So therefore, the costs are not available in time to correct the inefficiencies and control the cost. So whenever that particular cost is ascertained, that will be recorded, but that is not predetermined. That is called historical costing. So next, let us go for the next topic, that is called elements of cost. So first one, direct material cost. So all those materials which can be easily identified as a chargeable to a particular product or the job or process are known as direct materials. For example, timber used in furnitures, paper is used for the notebook production. So like that, whichever the product main materials are required, so if you are purchasing those materials, that cost will be called as direct material cost. So next one, direct labor cost. So all those laborers who can easily identified as attributable to a particular job or the production process are known as direct labor. The wages given to them are known as direct wages. For example, workers directly engaged on the production of any product and services. So those employees in a factory, they are called as direct laborers. And the next, direct or chargeable expenses. All those expenses which are incurred specifically for a particular job or the product or the process are known as direct expenses. For example, expenses on drawing, models, design, excise duty, royalty. So these are all called as direct or chargeable expenses. So let us go for the next one. Element of cost is overheads. So overheads also we can call it as indirect expenses. So indirect materials, indirect labor, indirect expenses are collectively known as overheads. Overheads means indirect expenses. So these expenses are incurred to produce a particular product or the process. And the next topic, let us go for the concept of cost. So first one, cost unit. It is a unit of product or the service or a time in terms of which cost may be computed. For example, if the manufacturing organization related to the production of the steel per ton, so per ton steel, how much it will be the cost? we can tell for the production of the coal also per ton in the aspect of the coal. So per meter in the case of the cloth. So like that. So cost may be measured based on the unit. That is called cost unit. Next one, cost center. So it is a part of an undertaking for which the cost may be ascertained. So it may be a location like a department or an area or an item of equipment like lathe or a person like salesman, foreman, or it may be related to the department like production department, marketing department, or HR department. So that is called cost center. So next let us go for the classification of the cost. So first one, according to variability, we can classify the cost into fixed cost, variable cost, semi-variable cost. So fixed cost or the cost irrespective of the volume of output, the cost will be same, remain same. So that is called fixed cost. For example, factory rent, insurance, or factory manager salary, we can call it as fixed cost. And the next is variable cost. So variable cost will vary according to the number of units produced. For example, direct material cost, direct labor cost, power cost. So these will vary according to the number of units produced. So that we can call it as the variable cost. So next is semi-variable cost. So semi-variable cost are those costs which are partly fixed and partly variable cost. For example, telephone charges. Okay, if it is the prepaid telephone charges, so it is some amount will be fixed. For example, 250 rupees monthly they have to pay the telephone rental. So after that, if they are using the minimum calls, so they have to pay. So that is called telephone charges. We can give an example for the semi-variable cost. So next we can classify the cost based according to the controllability. So controllable cost and uncontrollable cost, like that we can classify into two categories. For example, to the controllable cost, rent of the building. And the next third classification is according to normality. We can classify the cost into normal cost and abnormal cost. So normal cost is nothing but it is normally incurred at a given level of output and it forms the part of the cost of production. Abnormal cost is nothing but it is not normally incurred at a given level of output and therefore it is charges to the costing profit and loss account. And the next important classification of the cost is according to the managerial decisions. So we can classify the cost as marginal cost, out of packet cost, differential cost, like that. First one, let us go for the marginal cost. So it is the total variable cost comprising of prime cost and variable cost. And the next one, out of packet cost. It is a cost which gives rise to cash expenditure. And whatever the budgets we have prepared, if you are giving the expenditure more than the budgeted amount, so that is called out of packet cost. So next we can classify the cost as the differential cost. It is a change in cost due to change in the level of activity or the method of production. If you follow one method of production, the cost may be high. If you follow the another method of production, the cost may be less. So that is called differential cost. And next we can classify the cost as the sunk cost. So it is the cost which cannot be recovered due to the permanent closure of the plant. Okay, so permanently if you are closing a particular plant, so whatever the expenditure incurred, so you cannot recover that. So that is called sunk cost. Another one important cost is sudden cost. So it is the cost incurred on the plants kept idle due to temporary suspension of activities as strike, lockout, okay, or any other interruption. So because of that, temporarily the production has stopped. So that cost will be called as shutdown cost. And the next is called imputed cost or the notional cost. It is a cost irrespective in respect of which no actual expenditure incurred, for example, rent of own building or interest on the capital provided by the owner of the company. So for that a particular expenditure, okay, it is not charged. So that is called imputed cost or notional cost. Therefore, it appears only in the cost accounting records. And the next important one is replacement cost. It is the cost at which the assets can be replaced. For example, depreciation cost. Okay. Next one, opportunity cost. It is the cost which may be earned from the alternative use of the productive capacity. So if you are producing 60% production capacity, the cost will be different. If you are producing 90% of the capacity, the cost will be less. So that is called opportunity cost. And the next important one, avoidable cost. So it is the cost which can be eliminated on the discontinuation of a product or the department. So we are considering a particular department is not giving profit to the organization. So if you are eliminate the particular department, okay, in a particular place, so that is called avoidable cost. Or if you are having the excess labor sources in your organization, so for example, salary of the clerk in the department, so that is called avoidable cost. Another classification we can do, that is called unavoidable cost. So it is in which cannot be eliminated on the discontinuation of the product or the department. Okay, but even if you are temporarily closing the particular factory, you have to pay the salary for the factory manager or salary to the factory watchman. So that is called unavoidable cost. So these are the various classification of the costing we have seen. So far we have seen so many topics in the first unit. I hope all of you have understood very well. So thank you very much. Thank you all.